The UK housing market is changing forever. And if you don't understand what these biggest changes are, you might never ever get started in property ownership or investment property. From Wall Street giants buying up homes, to inflation squeezing your savings, to more regulation being brought in on landlords, the game has changed. In this video, I'm going to break down the 6 shifts happening to the property market and what you need to do to survive them. So number 1, we've got big institutions buying up loads of property here in the UK. We've got BlackRock, huge investment firm, they're in the UK and they're buying. We've got people like Lloyds Bank buying houses. We've even got the supermarkets coming in to buy houses. So this is a massive change. Why are all these really clever investment companies, banks, even supermarkets getting in on UK housing? Because they understand it's one of the best things you can invest in the whole world, not just in the UK. So what makes the UK best? Because we have a huge housing shortage. We're not building enough homes, yet at the same time, the number of people moving to the UK is huge. So we've got this massive supply and demand problem. That makes UK housing safe for investors, because on average, property doubles every 10 years, and this is guaranteed with a massive housing crisis we've got. So if you own UK property, you know it's in demand. We haven't got enough of it, which shoots the prices up. They know where to put their money, and it's UK housing. Now, if they're doing it, what do you think you need to do? Number 2, London is falling. So when you think about investing in UK property, most people think the capital will go to London. But this actually is the worst place to invest. So in London right now, you can get investment yields in property from 3 to 4%. But if you come to the north, like Manchester, Sheffield, Leeds, they're 6 to 8%. Why is this? Because London has got very high property prices. It's been booming over the last 20 years and they're quite high compared to the rest of the country. The challenge is their rents, though they're high, aren't high enough to cope with the bigger property prices. So you buy a buy-to-let in London, you're not going to make good profit because the rents aren't there to cover the high price. Where in somewhere like Manchester, you can get a decent price property because property prices are a lot lower, but you can command the same sort of rents as we see in London. So it means putting your money in the north is going to give you much more return on your investment than putting it in London. Yet because London's well known, most people think of it, but it isn't. It's the north. So if you live in London, or if you're overseas and you think you want to invest in UK property, you want to be looking at likes of Birmingham, Manchester, Sheffield, Leeds. You can get in now while the prices are still relatively affordable, and you're going to be able to get amazing rent. The great thing that's happening in cities like Birmingham and Manchester is we've got huge regeneration going on. So the country is actively boosting these cities and they're regenerating parts of them. Now, where regeneration goes on, we've got new football clubs being built, infrastructure. In Birmingham, you've got the Smithfield scheme where the king has invested in himself. So where you've got regeneration going on, it pushes the prices up. Now, the regeneration doesn't happen overnight. It's a 4-5 year project, but you get in now. By the time the regeneration's done, your property is going to be worth a lot more money. And when areas are regenerated, tenants want to go live there. So not only is your property going to go up in value, but you're going to get massive demand from tenants, which means you can charge great rents. This just isn't happening in London. So number 3, inflation is forcing people towards assets. So at the moment, inflation's high, which is bad if you've got money in the bank. Because if you've got money in the bank, high inflation, the bank pays you a crappy interest rate, always does. The bank never gives you a good interest rate. It means inflation's going up, your money in the bank is losing its buying power. So it's less worth. So the bank is eating away your money. And what is the bank using your money for? To go and invest in property. So instead of keeping your money in the bank, what we're seeing is people are getting the money out of the bank and they're buying assets, and they're buying hard assets like bricks and mortar, like property. So they're buying property. Now, what we see with inflation is when inflation's high, house prices go up, rents go up. So inflation is great for the property investor, but it's bad if you've got cash in the bank. So my advice for you is, if you've got cash in the bank, you've been sat waiting for a rainy day, stop it, because it's making you poorer. Get that cash out of the bank and invest in a property that's going to go up in value and give you a passive income. And right now with inflation, your property is going to go up in value faster and you're going to rent it out for a higher rate. So you're going to make more money. So instead of having that money sat in the bank getting lower, like worse in value, let it increase, let it grow in an asset. Number 4, uneducated landlords are being squeezed out. Why is this? So over the last 4 years, the government have been bringing in lots of changes. Now, these changes are hitting landlords that are not educated, landlords that are bought in their personal name that don't really know what they're doing. I mean, the biggest change that we've seen has kicked so many landlords out is Section 24. So Section 24 was brought in a few years ago and it was phased in, and it only last year was fully in to really hit landlords. And that says if you're renting a property out in your personal name and you're charging £1,000 rent, you're taxed on the full £1,000. You cannot offset your mortgage interest rate as an expense. Where in a limited company, you buy a house, you get £1,000 in rent for that house, you can deduct mortgage interest, deduct all your costs, you're only taxed on the profit. So taxed on the full amount of it or the profit, you want to be taxed on the profit. So it's much more tax efficient in limited companies. You can do more in limited companies than you can in your personal name. And it's such a shame because 10, 20 years ago, it probably was the right thing to buy in your personal name, but not now with the changes. And the thing is, the government will keep doing this. Governments keep changing. What governments will always protect is business, because business drives the economy and makes jobs. So the government is doing the easy thing. They're coming after landlords with property in their personal name. So it's absolutely so important if you're going to go and start being a property investor that you get educated so you don't fall foul of some of this stuff that'll stop you before you even get going. And number 5, renting will become the new norm. In most of Europe already, people rent, they don't own. For some reason in the UK, we've always been a nation of homeowners, but that's starting to change. I mean, we're seeing first-time buyers. The average age for these guys is 34. They're still living with their parents. They're not buying, or they're long-term renting. You see, the generation that's growing up in the UK right now aren't bothered about owning their own home. They're more into experiences, lifestyle, so they don't really want to own. But that's a huge opportunity for you getting into property. There's more rental demand than there's ever been before, and rents are going up at the fastest rate than ever before because there's not enough property and there's loads of people that wants to rent, and that will be a trend that continues. We're going to see over the next 10, 20 years more people want to rent than own, which makes a massive opportunity for you to get into property because you know the demand is there. I mean, right now where I am in Yorkshire, for every 1 rental property that comes available, there's 18 people for it. 18 people looking. So for the average 1 property that comes on the market, 18 people. So I get to pick the very best tenants. I know the demand and they've got no void periods. And that's not just me. That's the whole of the UK. So with rental soaring, the demand for rental soaring, the demand for UK property and people wanting to live here, this is a golden opportunity for you to get in and get started. And get started now while house prices are here. I laugh with my mum because when I was a baby, my mum bought her first property and she bought it for £7,000 and she had a £5,000 mortgage on it. And I say to my mum all the time, Mum, you should have gone and bought 10 of those. My mum says, oh, we didn't know. Nobody knew what property was going to do. Well, you do now. I'm telling you. Right now, the average price is 300,000. Go and buy 10 of them because in 10, 20 years, the average price will be £1 million. So go and get into property now while you can. So number 6, the real gap is knowledge, not money. It's not lack of money. There's no lack of money in this world. There's so much money. It's the knowledge, people being able to acquire the money to build portfolios. I started my £8.6 million property portfolio 8 years ago when I had no money. I was 24 grand in debt. I had 2 kids on my own. My credit rating was awful. And I started my portfolio using someone else's money. It wasn't money I lacked. I just lacked the knowledge. And when I got educated and understood what I needed to do, property isn't some random thing. It's science, literally. It's a blueprint that you follow. It's a science that you follow to build wealth. And that's how you can start. So if you're sat there thinking, well, I haven't got big pots of money in my bank account, you don't need it. What you're lacking is the knowledge to be able to get the money to build a portfolio. I use private angel investors. They give me the money. I buy the property, do it up, I either sell it or remortgage it to pay the individual back. And I give them an interest rate of between 6 to 10%. I only know how to do that because I know the knowledge. I mean, 8 years ago, I didn't even know that was a thing. I didn't even know it was legal to do this with people. But I'm winning because I get a property and my investor's winning because their money is making more money instead of sat in the bank going down in value. The UK property market is shifting forever and it's doing it fast. So if you don't take this opportunity to get on board now, you might miss it forever. That's why I run a free 90-minute masterclass to get you started, where I'm going to show you different property strategies, how to be tax efficient, and how to do it without using your own money. It really is a property fast track to getting you started now and taking advantage to everything that's going on in the UK right now. Click the link in the description. I look forward to seeing you there.